All right. Today's Tuesday, November 25, and this is a recap for the stock market activities today. And folks, I got a good one for you tonight. We're about one day from my favorite holiday, Thanksgiving. Although I'm a big fan of the entirety of the holiday season, to be honest with you. Some folks want it to be summer all year long. I'm a fan of changing seasons. But anyhow, folks, thank you for joining us tonight. We have a brief discussion here for, well, brief. I mean, it's probably going to end up being an hour video, but we're going to give it a shot here. So let's just dive right into it here, folks, because last week, all eyes were on NVIDIA's earnings. And once we got the report by NVIDIA, the analysts came out all raving with good reviews. Oh, this is the best earnings ever, and higher we go. There's no concerns about the AI bubble or whatnot. And next thing you know, NVIDIA reverses and loses all of its gains after the report came out, and it dragged the entirety of the market down with it. Now, Uncle Mav, unlike the analysts, told you beforehand. In a video we produced right after NVIDIA's earnings, I said that NVIDIA offers temporary relief, but Bitcoin and the Fed dictate what happens next. And last week, we got bad news with Bitcoin flushing down. We got bad news from the Fed that we're probably not going to see interest rate cuts in December. But that began to change a little bit on Friday. And if we do a check on Bitcoin right now, this is how the chart looks. So we got a little bit of a rebound. We're not out of the woods yet. You really need to close above 94,000 to say, okay, we got at least a short-term bottom. But for now, it gives the market the relief that it needs. That Bitcoin is not going to continue to crash and drag the entirety of the market down with it. It also gives relief to a certain MicroStrategy CEO from becoming a McDonald's employee. Maybe that's going to happen as a Christmas gift. So let's make sure that we crash MicroStrategy by Christmas. But that's Bitcoin for you. For now, it's holding. That's what the market needs. It just needs Bitcoin to stop crashing. Now, in the other front, we have the Fed. And the expectations were kind of sour on a Fed rate cut in December throughout last week. But then came Friday, and a voting member, the New York Fed zombie Williams, revived the hopes of an interest rate cut. Now, Williams is a Powell ally. So when he supports a Fed rate cut, the market reads it as, okay, the Fed is going to do it. And if that was not enough, today we got a guaranteed outcome of rate cuts by the Fed because the Trump administration is now leaning toward Kevin Hassett to become the next Stooge of the Fed. Now, of course, when we say the market likes it, because the market likes inflation. So when the Fed cuts rates and you already have an inflation problem in the economy, what do you think is going to happen? Inflation will go higher. So the market, aka the billionaires, the Wall Streeters, the oligarchy, oh, they love it because it pushes asset prices higher. But it keeps the working class of this country enslaved. That's the key word. Under the horror of stagflation. Now, a brief background about this gentleman, Kevin Hassett. First of all, that's my pick for the Fed, to be honest with you, because Waller doesn't make, his face is a little bit rough, doesn't make good memes. But look at this smile right here. Look at that face. I mean, think about the memes we're going to make with this face. Think about how awkward this guy's going to be at the podium when he does the Fed conference. If you thought Jay Powell was bad, think again. Kevin Hassett also served at the Bush administration as an economic advisor. And of course, we all remember the economic boom that we got back under the Bush administration. I'm joking, of course. It was an economic kaboom, not a boom. Kevin Hassett is also famous for authoring this book right here. It says Dow 36,000. He made a call that the Dow Jones is going to trade at 36,000. When was that call made and this book released? At the end of 1999, right before the crash. But hey, to his credit here, folks, I mean, 22 years later, we got down 36,000. The guy was early, but he was not wrong. See, you can't say that when you make a bullish call, because you're calling that the sun is going to come out from the east. So your accuracy when it comes to the timing matters. If you're making a counter trend call, okay, the market is going to crash, then you can be early, but you're not going to be wrong. So obviously, Mr. Hassett is an economic genius. And I cannot wait. I cannot wait for Federal Reserve Chair Hassett. Matter of fact, Kevin, if you're listening, once you become Fed chair, let's just cut interest rates to zero. Not 25 basis points, 50 basis points. Let's just cut it to zero. One shot and see what happens. What's going to happen is we're going to fill in this chart right here. So you have in blue, you have the inflation trend back in the 1970s. And in orange, you got the inflation trend for today. So Stooge Hassett comes in. He becomes a good old boy, does what the White House wants him to do. He cuts rates to serve the oligarchy and fluff up asset prices higher, causing inflation. And then we're all going to wonder, what happened? Why is inflation coming back? And don't forget about Another caveat here that a lot of folks are not paying attention to right now, because if Hassett begins to cut rates and we begin to revive commodities inflation, because that's what happened when you devalue the dollar by cutting rates when it's not needed, you're going to push commodities prices higher. Well, guess which country is a big importer of commodities? The answer is Japan. And there is a phenomenon you might recall from last year. It's called the yen carry trade. That means that if the Bank of Japan begins to hike rates and firm up the value of the yen, U.S. technology stocks will begin to suffer and be sold. And right now, the bond vigilantes in Japan are doing a great job to squeeze the Bank of Japan. You gotta cut rates. If you don't do it, the value of the yen is going to collapse, and that country is going to be under hyperinflation. And what could push the Bank of Japan to cut rates? Despite, of course, the Bank of Japan is not independent. I mean, the entire country of Japan is not independent. It's owned and controlled. It's a subsidy of the United States after we nuked them, of course. So the Bank of Japan been hesitant. They wanted to raise rates a long time ago, but the Treasury under Yellen and now under Besant, they're not letting them do that. But if the Federal Reserve here in the U.S. begins to revive that inflation by cutting rates, at some point the Bank of Japan will buckle and say, okay, we're going to begin to hike rates. And here comes the Japanese yen carry trade 2.0. Now, I don't know what Trump in the White House is thinking by calling for interest rate cuts. The guy's probably not economic savvy. He thinks that cutting rates will be good for the economy with no regard to inflation. I mean, he says inflation is dead. Well, here's the polls. Here's what you guys think. What do you think of Trump handling of the economy? 64% disapprove. What do you think about Trump handling of inflation? 68% disapprove. That's a disastrous number. And even in immigration, which was his strongest suit, now we have 55% of the population saying they disapprove. Matter of fact, since the elections, his approval of inflation down 27 points. Again, disastrous. Numbers that are worse than Biden's. When you look at the trend right here, his approval of the economy is just melting down, now to 36%. That is a disaster. When asked, is Trump policies making grocery prices go up, not change, or go down? 65% said go up. The president is to blame for the high prices I'm paying at the grocery store. Of course, it's not that simple because inflation has been going on for years now, but when you're at the top of the chain, you're the president, you're going to be blamed for it. And on top of that, you're not really mitigating it, you're adding tariffs on top of it. And now you want to reduce interest rates and cause more inflation? I mean, does that make sense to anybody? Of course not. But right now, stooges like Hassett and Besant, they're not there surrounding the White House to give their honest economic opinion. They're there just to do whatever the president wants. And he thinks that lowering interest rates is going to solve the affordability crisis. It's going to solve the inflation crisis. It's going to make housing affordable again. Yeah, it's going to make housing affordable again. For the corporations, for Jeff Bezos and BlackRock, not for you and me. We have dangerous inflation trends to begin with. And Hassett, of course, is aware of all of this. But like I said, the guy's a stooge, so he doesn't care. He's just going to find out an argument as an excuse to cut rates. But when you look at the inflation trend right now, notice these red bars. That's your core services inflation. The bars in gray, that's your goods inflation. The bars in black, that's your energy inflation. Bars in blue is food inflation. So you can see that the majority of the inflation problem that we have in the economy right now is coming from core services and food. But imagine what's going to happen if we begin to see inflation in goods because of tariffs and inflation in energy because of this disaster that they're cooking right now, a war with Venezuela. What do you think is going to happen here? And on top of that, the Fed, of course, is going to cut rates and make it easier for inflation to go up. Another alarming trend. Leading indicator in white, it's services prices, non-manufacturing prices, according to the ISM. You can see the trend is moving higher. And soon enough, core CPI is going to catch up. You see core CPI in orange. It's going to catch up and begin to head higher. The Fed will give the permission by cutting rates to core CPI to begin to move up again. And maybe this is why, by the way, the government is not releasing the inflation data, right? The government shut down, wink, wink. We lost the inflation data, yeah, right. And of course, it's not a surprise to see consumer confidence collapsing. Consumer confidence declined in November by the most since the month of April. That's Liberation Day tariff war. Gee, why do we see consumer confidence collapsing? Well, because this is an economy at the end of the day that is pretty much holding by a thread right now. And that thread is the insanity of the AI mania spending on data centers. That's the majority of the contribution to the GDP. Without it, GDP goes negative. When you look at real estate investment, you see data centers skyrocketing, but any investment excluding data centers actually trending down. And who the hell are they building all of these data centers for? Is there a real-life demand by the end consumer, meaning us, saying, hey, AI companies, big technology companies, we cannot wait to spend all of our money in your AI, so please build all of these data centers. Nobody said that. They're just building it because the other company is doing it. And they're afraid that if they don't do it, they fall behind. It's an investment blowing up billions, trillions of dollars based on FOMO. Furthermore, this economy has been working out only for the rich. And this is why you see consumer confidence and the poll numbers collapsing. Affluent Americans' share of income is increasing. So look at what happened in the 1980s when the crony capitalism started and the manipulation of interest rates by the Fed. Since then, the share of all income earned by the top 10% of Americans skyrocketed from under 35% now to over 45%, meaning that the majority of wealth created in the economy is floating to the top. And the working class, the middle class, lower income class, they're not getting anything. The share of spending by the top 10% of earners in this country is about 50%. So again, 10% makes up for over 50% of the spending in this economy. So if the stock market keeps going up because they're cutting rates and they're artificially propping up the asset prices, stocks and real estate, it makes the rich feel richer. And they begin to spend and splurge in the economy, vacations, travel, cruises, hotels, and they keep the economy alive. But the rest is enslaved. The rest is working paycheck to paycheck, 2-3 jobs, just to keep up with the necessities. And Kevin Hassett and Trump, what they want is more of this, more of what you're looking at right now. Because Trump comes out and says, oh, the economy is great. I don't know what the media is talking about. Because he's surrounded by these snakes and leeches, like Kevin Hassett, like Witkoff, like Besant. All what they care about is just suck more money out of this country for themselves, to make themselves richer. And if that happens, Mr. President, you're doing a great job. The economy is doing better than ever before. And Trump believes it, because he's living in a bubble right now. Of course, the elections in New York City gave him a little bit of a wake-up call. And as he sees these poll numbers, at some point he's going to catch up. Something is not going good in the economy. And his solution right now is, oh, we got to lower interest rates. That's going to do the job. That's going to make it worse. And then what? And then he's going to shift toward, oh, it's actually the grocery stores doing price gouging. He's going to try to implement price controls, doing all of this communism, just like Nixon. You think that's far-fetched? Think again, buddy. At the same time, while the rich is doing over 50% of spending in the economy and earning almost 50% of all of the income in the economy, look at this trend right here. U.S. unemployment is moving higher. 1.4 million more people are unemployed than 3 years ago. When it comes to wage growth, for lower income, it's been collapsing. For higher income, it's been going higher. So this is what they mean when they talk about the K-shaped economy. They're giving it a cute name, like it's a cereal. K-shaped economy. No, it's not K-shaped economy. It's an oligarchy. It's an economy that works for a selected group of the population, and the rest are enslaved doing jobs, 2-3 jobs, living paycheck to paycheck, just to pay the rent, the necessities, the bills. What do you think that's a recipe for? If you said revolution, you got it right. Name one nation that oppressed its working citizens, working population to this magnitude like this and survived. And the oligarchy knows it, by the way. They know that the economy is just hanging by a thread. And the moment the stock market crashes, we're going to see an economic depression, the likes that we've never seen before. So you have this guy, David Sachs, another swampy creature, by the way, who says, according to the Wall Street Journal, AI-related investment accounts for half of the GDP growth. A reversal would risk a recession. We cannot afford to go backward. In other words, too big to fail again. Hey, we're gambling and we're keeping the stock market higher, but if it doesn't work out, the market crashes and drags the entirety of the economy down with it. It's about the jobs, they say every time, even back in the real estate bubble, when the banksters were gambling with the economy, and actually at some point they were betting against their own companies. When the crash happened, what did they say? Oh, we have to bail out the economy because jobs, the employees, we can't risk that. So when the market goes up, because they're artificially creating a bubble, it benefits them. They get richer. The Alex Karps of the world, the CEOs begin to dump shares, cashing in billions of dollars. The David Sachs of the world. But the rest of the population sees nothing. President Trump says, oh, but your 401k is going up. Who gives a shit? That's money I cannot access. And who the hell knows by the time I retire whether it's going to work out or not? Because my 401k looks pretty good right now, but things go sour, it's not going to look pretty good. And by the way, how ironic is the fact that this guy, David Sachs, I mean, he's a crypto billionaire, right? And now he's in charge with the country's crypto policy. The Secretary of Energy, Chris Wright, also happens to be the owner of Liberty Energy. And he's scoring a lot of nice contracts by the government, making himself richer. Scott Bessent just bailed out his buddies who were betting for the Argentinian peso. You have Pulte from Pulte Homes, home builder, billionaires in charge of the housing policy. Witkoff, owns a huge real estate portfolio. Of course, he wants interest rates to go down. The Secretary of Commerce, lunatic. His firm is making billions of dollars based on the insider information that he's getting. This is the swamp. And their job is to suck the blood out of this country right now, as much as they can, before the crash happens. And then, of course, they don't care. The peasants, the working class, will be hurt by the crash, not us. And then we're going to scam them again into, hey, if you want to keep your job, if you want to avoid a depression, let's do another round of bailouts. And they get to invest their money again in these assets and get richer and richer and richer. But this time around, once we hit a recession, it's going to be different because AI is going to take your jobs. Now you need a universal basic income, right? We don't want the youth to be unemployed and have no money in their pockets because then they're going to revolt. But as a condition of your universal basic income, they're going to implant the chip in your brain thing by Elon Musk to read your thoughts. And then Palantir is going to read through your thoughts and flag any risks of rebellion or thoughts that goes contrary to what the regime wants. They're going to scoop you off the street and cut your universal basic income and lock you in a prison, hook your balls to a lithium battery, and waterboard you. And then, of course, at some point, the youth is going to be so angry and they're going to rebel, do a revolution, and decorate Central Park with the chopped heads of these oligarchs. We got a bright future ahead of us, folks. And we have a lot of people who are so naive, they don't understand what I'm saying. They say, Mav, you're just crazy. Now, look at what happened after the Great Depression, 1929. Economies collapsed all over the world, and that gave rise to, think about Europe. 1930s. You think that's not going to happen again? Well, good luck to you. Now, in the meantime, we're going to make money somehow. In this market, they turned into a casino. Now, what happens if the Fed reduces interest rates? That's going to be pretty good for the rich to raise more debt and do more spending in the economy. So what kind of stocks benefit? The stocks that cater to the affluent consumer. You look at a weekly chart for Ralph Lauren. That stock is not having any problems at all. Skyrocketing right now. Look at VIK, Viking Cruises. Beautiful breakout in the weekly chart. No problem there. The affluent consumer is spending on those cruises. Fully booked in 2026. And they're even getting bookings right now for 27. Delta Airlines, they make the majority of their revenue right now from premium cabin tickets, aka the affluent consumer. So that's, it looks to me at least, that it wants to retest the highs. Luxury hotels like IHG, that's also trading at almost all-time highs. If you look at Hyatt, that's also trading almost at all-time highs. You cut rates, the rich feels pretty good. They begin spending again, taking vacations, booking these hotels and cruises and airlines. You look at MOV, Movado, weekly chart. That's breaking out too. Now, unfortunately for us, we sold it here at the Maverick portfolio for a 12.5% gain. But we might head back into it if the Fed is going to cut rates and fluff up the economy of the affluent consumer again. Might jump back in. ZGN, Xenia. You have to be an oligarch to afford this, but it's doing pretty good. It's breaking out. We sold it a few weeks ago for a gain of about 28%. Might hop back in. But rest assured, if these stocks are too fancy for your taste, you can still bet on some regular stocks that benefit from the enslavement of the working class. One stock we've been talking about since last year is TJX, TJ Maxx. Now, why is this stock trading to the moon right now? The answer is because you have a lot of shoppers who used to afford Nordstrom, used to afford Macy's, and whatnot. They can't afford it anymore, so they have to downgrade and shop at TJ Maxx, looking for affordability and bargains. And this is why we see volume of spending in TJ Maxx going up, and hence the stock benefits. It's the same case for Ross. ROST is the ticker. That stock broke out, and it's already trading at all-time highs. Now, if you look at any charts of consumer brands like General Mills or anything that caters to the actual consumer in the economy, it's not doing pretty good. And that's the economy that Trump and Hassett and the swampy creatures want. They want an economy that only works for the rich and keep the rest living paycheck to paycheck. Now, let's segue to the second part of this coverage. We're going to talk about the market a little bit more, and I'm going to begin with the morning briefs I issued Monday and today. Let's begin with the morning brief from Monday. I said, good morning. This is my outlook for the week. I expect today and tomorrow, meaning Monday, Tuesday, to be generally positive, with Monday seeing growth, tech, small caps, and retail popular stocks rebounding the most. And you saw that happening Monday. Then Tuesday, value stocks lead before a pullback Wednesday ahead of Thanksgiving. That is assuming that Bitcoin doesn't start crashing again. So if you look at the stock market map, the majority of the gains today came outside of technology. Nvidia was actually down about 2.5%. But the gains came from staples, came from cyclicals, came from financials, came from healthcare. And look at how beautiful healthcare looks. And a lot of portfolio managers will gravitate toward healthcare because right now we have a lot of questions about AI. Google is now attacking Nvidia. Soon enough, Microsoft will unveil their own chips. Amazon will do the same. So the AI mania is stopping, but there are opportunities outside of it. Because when you think about Big Pharma, for example, the tariff issue is now behind us when it comes to Big Pharma. You have companies where the spending on drugs is going to stay intact, medicine. You have an aging population. Even if we have a recession, what are you going to do? Cut them off? You're not going to do that. And who pays the bill at the end of the day? The government, aka the taxpayer. So you're not going to worry about consumers not spending. The spending is intact. The demand is intact. So a lot of portfolio managers already gravitating toward these big pharma names. I mean, check out my boy Merck. MRK, up over 5% today alone. There's a lot of talk about, oh my God, Alphabet is skyrocketing. It's the winner of AI. Month to date, if we zoom out, Google is up about 15%. Merck, classic Merck value, up almost 23%. And since we added to the Maverick portfolio October 3rd, Merck is up about 18%. Not bad. And the chart looks like it wants to break out even more. So any pullback at Merck, probably going to be an opportunity to buy. Now, a lot of folks are saying, well, the next breakout in Big Pharma is going to be Pfizer. I think that Pfizer has a lot of problems. Maybe a lot of you are just seduced by the high dividend. I would actually suggest it could be Bristol Myers, BMY. It still pays a high dividend, and it looks like it's flirting with the 50 weeks moving average in blue. And it might break above. That's going to be considered to be a bullish breakout. So you still have a lot of long opportunities in this market besides the AI mania. Now we go back to the morning brief from Monday. I do these trades when we have a shortened trading holiday week with low volume like we have right now. We caught up some rebound trades here via shares, not options. So we have Coinbase, and I stated why I think it's going to rebound. We also listed Lucid Motors and IGV. That's the software ETF, Home Depot, HD, and then we have AT&T, ticker T, Blackstone, BX, and Fastenal, FAST. Let's look at some of these charts and give you some updates. So this is Coinbase, the chart that I shared with you, suggesting a rebound of a falling wedge. Here's the update. It's okay. We got a little bit of a rebound. Maybe we'll get another one tomorrow, and then we'll just dump it because if Bitcoin begins to head down again, Coinbase is not going to do pretty good. So these are rent kind of trades. They're not really owning the shares. We're just going to do a quickie here. In, out, hello, goodbye. Here's Lucid Motor, LSID, the chart that I gave you. You can see the falling wedge, oversold. We're betting for a rebound a little bit. Here's the update for you. So far, so good. If you made profits, you probably want to book them tomorrow. Max. You have IGV. This is the chart that I gave you for the software ETF. We suggested that we have a bottoming candle in the daily. Here's the update for you. Yep, we moved higher, so that's a good trade too. How about Home Depot? This is the chart that I gave you. Oversold. We have a gap up. I suggested we're probably going to rebound and close that gap. Here's the update for you. So far, so good. Some of you closed this trade, made a lot of money. Good for you. You might hold it till tomorrow, but I'm not going to hold Home Depot as a core holding in my portfolio because the report was not good. But it's just a rebound trade for now. AT&T, here's the chart that I gave you, suggesting that we could have a cup and handle breakout above the 50 days moving average in blue. Well, here's the update. Didn't happen. A little bit of resistance at the 50, but it could happen later. If you have interest rates going down and bond yields, it could help the dividend-paying names like AT&T to move up. How about Blackstone, BX? This is a weekly chart. This is the one that I gave you, suggesting that we have a falling wedge pattern. We're probably going to rebound higher. Here's the update for you. So far, so good. And the last one, FAST, Fastenal, also suggesting that we have on the weekly chart a falling wedge. We're probably going to rebound higher out of this falling wedge. And here's the update for you. Not so good so far. But I don't mind holding Fastenal for a little bit longer because I think at the end of the day, it will rebound, but it might take a little longer than the other names. Let's segue to the morning brief from today. I said good morning. The VIX 2 hours chart is forming a mini falling wedge and likely to break out of it, causing the market to wobble. Likewise, BTC, Bitcoin is flirting with losing its bullish 2 hours trend line. So we might see some pain in growth stocks in the market. That's initially because here's what happened. This is the chart that I gave you. The VIX 2 hours chart, I was expecting a breakout from the VIX. Indeed, we got a breakout as you can see, but immediately reversed after the Kevin Hassett news. And here's Bitcoin, the 2 hours chart that I gave you. We have a trend line. We don't want to lose the trend line. And here's the update. Lost it for a little bit, but right now, so far, so good for Bitcoin. But we're not out of the woods yet. We go back to the morning brief. As far as trading today, I would sell this week's put credit spreads or calendar put spreads with AMD and NVIDIA. The idea is to sell this week because all of these names were gapping down. So if you sell put credit spreads or you sell put calendar spreads, you get to capture that high credit in a shortened trading week. And that is used to finance a December bet buying naked puts. And then we've done a call credit spreads on Google right off the gate to raise some cash in this shortened trading week, assuming that Google is going to gap up and then reverse some of those gains. So when we check on AMD, so far so good in the 5 minutes chart, because if you sold any put credit spreads or any puts for the expiration date of this week, you did pretty good because we've seen a rebound in AMD later in the day. Now by December, it could flip and trade down again. So the ideal trading scenario would be selling the put spread in the morning and then buying the December put leg at the end of the day. And the same goes for NVIDIA. If you sold put credit spreads or put calendar spreads right off the gate in the morning, you did pretty good because the name rebounded and traded higher all the way till the end of the day. Now, when we look at Alphabet, here we sold the call credit spread right off the gate in the morning. So you see the gap up and then it reduced some of those gains. So if you sold the 330, for example, with the expiration date of this week or the 35, you've raised a pretty nice credit from selling those calls. You're going to see decay in those premiums because of the holiday. That's what you need to see when you're selling credit spreads. Back to the morning brief, I said I also think that it's worth speculating on bullish breakout for gold by using GDX, that's the gold miner ETF, calendar calls. You sell this week. See, this week is pretty good to raise premium because it is a shortened trading week. So you want to sell this week and buy something later. In this case, we're selling expiration date this week for the calls, and we're buying December. Here's the daily chart for the GDX gold miners. It looks like a cup and handle. It is worth speculating on. Of course, a breakout in the GDX or gold for that matter, not going to happen until the dollar begins to reverse down. Right now, we see the dollar weak based on the Hassett news, so it might help gold to move higher, and with it, the gold miners. Lastly, let's do some technical analysis before we go. We're not going to spend a lot of time right here because, honestly, the technicals are not going to matter that much. Right now, though, you're looking at the E-mini futures for the S&P 500 daily chart. What do we see here? So we got the inverse ABC pattern. Then we caught a big rebound off 65.50. We're trading right now at about 68. The highs of the reversal candle was 6,801.5. We closed above the 50, moving average in blue. Now you can be picky and say, but we need a daily close above 6,800 to confirm that we have a bullish reversal. Sure. But again, I would caution against being too fixated on technical analysis because I would actually use the Ho indicator. Because on Friday, I gave you the Ho indicator update. The Ho's were kind of scared. They were dumping their positions Friday, and that was your confirmation for a short-term bottom. So if we begin to see the Ho's being optimistic again, that's your signal that the rebound is over. And rest assured, folks, over the holidays, I'm going to frequent a lot of strip clubs to do my economic research. And I'm going to let you know what I find out. Now, joking aside, we don't want to rely too much on technical analysis because if you look at the E-mini futures again from another perspective, clean it up, if we stall here and begin to reverse again, that'd be a confirmation of the topping head and shoulder pattern. You can see it better if we switch to the weekly chart. You can see that we have any stall right now could be creating a topping head and shoulder formation, and then plug in your MACD indicator and zoom in on the weekly MACD. What do we see here? We see that the bullish phase that began around the end of Liberation Day and the tacoing, you can see the trend is ending. The green bars are now becoming red, which means that the bullish phase is ending. Those juicy gains, V-shaped recoveries, 3-4% worth of gains every day, that's over now. It's going to be harder because you're entering the end of this bullish phase according to the weekly MACD. And if we begin to trend this way, end up losing and trading below the zero line, that's going to be a confirmation that we've now entered a bearish phase. Now with that, folks, let's segue to the conclusion of this video. What do we have on the economic calendar tomorrow? We got initial jobless claims. We got durable goods. That's going to be a delayed report. Nobody's going to pay attention to anything here. And then we have the Fed's beige book. Doesn't matter either because we know that Hassett is going to be the next Stooge and he's going to cut rates. So what does it matter? Whatever the hell the Fed Reserve beige book says, the market doesn't really care. On the earnings calendar, we have Deere. That's going to be the most important name. But again, like I said, folks, tomorrow is going to be mostly psychological. My bet is we could see a little bit of a pullback and then the algorithms will do the job and float the market all the way till the close. And then we come back Friday. And we begin to assess. We begin to digest, not just the turkey. We begin to digest whether this market is going to initiate a holiday rally or is it done? It's going to begin to reverse and trade down. Until then, folks, this is all I got for you for tonight. Now, if you happen to be a member of this channel, I have 2 more videos coming for you this week. One of them will be more educational. We're going to look at the morning brief, the trades that we've done in the last 2-3 weeks, and study them again. How do I find trades? How do I set targets? How do I pick my strikes if we're trading via options? How do I pick my expiration date? And we're going to examine all of these trades, what worked, what didn't, and make an educational value out of it. And the other video is going to be the longer-awaited Maverick Short portfolio. What am I shorting? What am I thinking about shorting next? So So stay tuned, folks, but this is all I got for you for now. And I want everybody to enjoy the Thanksgiving holiday. Get high, get drunk, don't talk politics. Enjoy your time. And I'm thankful for you guys, the audience, best audience on the planet. Love and appreciate all of you, but that's enough ass kissing for you for tonight. So why don't you all go f*** yourselves? Happy Turkey Day. Good night.